In this video, I'm going to show you how to massively improve your trading strategies without any overfitting and with one simple yet extremely powerful condition. So let's get to it.
All you need are breakouts, set your spirit free.
Welcome back, breakout trading friends, breakout trading community, breakout trading specialists, and to-be breakout traders. If you love breakout trading like me, you're in the right place. If you're learning about breakout trading, you're in the right place either. And today I'm going to share with you very simple yet extremely powerful technique to do a true magic with your strategies with zero risk of overfitting. But first of all, let me get back to the model strategy which I'm using in this example, in this walkthrough. So what I did, I just designed a very simple model strategy. This is a day trading Nasdaq strategy, E-mini Nasdaq strategy. This is the results for the last 5 years. And it's just a model, okay? It's not a complete strategy. I deliberately did not implement any filters so we can work on this together with those zero risk techniques. And one of that I'm going to explain today. And it's all based on the Mr. Breakout's model, which is from the book, The Breakout Trading Revolution. And the code is very simple. I code in TradeStation, so I don't know how to code this in any other platform. Please don't ask me, ask ChatGPT or any other AI. But the condition is very simple. We take a 10-day moving average on daily data. That means data 2 because the primary data are 60 minutes. So the primary data are 60 minutes, but I had to put secondary daily data to calculate 10 bars moving average. And then we simply calculate the breakout level, which is the this moving average plus 2.2 times of average to range 20. That's the volatility. That's where we stop that's where we place the order, the stop order to enter the position, and we exit at the end of the day. That's set exit on the close syntax in TradeStation and or place the stop loss. So again, everything is based on this simple Mr. Breakout's formula. Now, if you're new to trading or breakout trading, there's an entire completely free masterclass at this channel. So just go back and watch the entire masterclass. Exactly, I'm showing step by step how to create professional, viable, tradable breakout strategies, literally in minutes. Please do not expect anything overcomplicated from me. I love keeping things simple and efficient. And now let's get to why we are here, and that is how to improve it. And actually the improvement, the technique is very simple, yet extremely powerful. And it's got everything to do with HOD and LOD, which stands for high of the day and low of the day. So what is it and how can this help us? Well, basically, if you have a look on a chart, so here, this is the E-mini Nasdaq 60 minutes. And in this box, this is 1 day, okay? So this is the beginning of the day is progressing, now it closed, and now we're starting another day. And now, if you have a look, like each bar is progressing and creating a new high of the day or low of the day. So we open here, now we get here, this is new high of the day. Then it stays the same for 1 to 3 bars. Then we progress higher. That's so we're progressing with the high of the day. Then next bar, it's even higher. And we're just recording the high of the day and then low of the day. That's it. So here the low day, we start here. And for a long time, it's the same. Now we're pushing the low of the day lower, lower, and lower. Super simple. There's not any look ahead bias. We just update this on every single bar. And that's how we track the high of the day and low of the day. Now, why is this important? Please pay attention. This is of quintessential importance. This is extremely important because high of the day and low of the day in many cases, and especially in day trading strategies and in many markets, it's one of the strongest support resistance level ever. Like, this is the strongest support resistance ever, and if it goes through, it goes through. It's amazing. If it doesn't, then there's no force to move the day lower or higher. And that's why just assessing whether our trade is or is not happening at the high of the day or low of the day, that simple condition alone can significantly reduce the noise in our trading and remove a lot of bad trades. So again, let me show you practically. It's very simple. I'm again going to use the Smashing False Breakouts module, extremely powerful module in the BreakoutOS, which can simulate dozens and dozens of different low risk or even zero risk overfit improvements. So I go just to the improve section where I improve any strategy I want. I go to the breakout trading, the Smashing False Breakouts Pro module, which is based on 4 different levels of timing. It can improve general timing, system timing, volatility timing, and market timing. Again, I could, and I probably will record an entire video just about this entry or this perfect timing pyramid. So please subscribe, because that would alone be a fantastic video just to talk about all these timing levels. And now I just load this strategy. So this is the exactly same strategy. As you can see, this is the original strategy. Here is the same strategy, same drawdowns, exactly same strategy. And now I'm going to explore this one simple technique, high of the day and low of the day. And all we're going to do, we're just going to visualize how trades look differently if we take them on the high of the day, on the low of the day, or in between. Now, there's not a rule about what it should look like. The rule of thumb here is that each of these, it's a different modality, it's a different market context. So it doesn't necessarily mean that each time one should produce certain outcome and the other another. It varies strategy by strategy and market by market. The point here is these are major contextual levels. The context of the market at the high of the day, at the low of the day, and in between, it's a completely different context, and that's what we need to focus on. So we go back to the breakouts OS and Smashing False Breakouts. Then one of the timing here is the system timing on the level of the system. That's what we are doing here. We're just improving or assessing and analyzing the system timing level. And now what we do here, we go to the entry bar quality. It's to HOD LOD, high of the day, low of the day. And now if we click, we immediately see assessment of all the trades we take at the high of the day, at the low of the day, and everything in between. And as you can see, and this is from my perspective just a common sense, what we do not want to do is we do not want to take trades at the low of the day. And this makes perfect sense, because if we go back to this strategy, it's a long strategy. I forget to mention this at the very beginning, but it's a long strategy only, okay? So now it makes all the sense in the universe. Why on earth we should be even taking trades at the low of the day? Because that's quite a danger zone, and that's where we probably should avoid trades. And that's exactly what this analysis just communicates with us very quickly. It says, hey, do not take any trade at the low of the day. That's a danger zone, and as you can see, you will only be losing money, actually quite a lot of money. Average trade in this zone is minus $100. So now what we simply do, we click and we say, okay, show me what happens if we exclude all this low of the day from this original strategy. So we click on exclude, and we see, guys, this is instant, one-click, immediate improvement. So net profit drawdowns got improved from 524 to 757. That's a very nice improvement considering this is not even a filter. This is non-optimizable condition. We do not optimize anything, thus we cannot even re-optimize anything here. This is zero risk filter. Besides, this is based on common logic, trading logic. Please stop thinking like mathematicians and coders, especially like coders, and start thinking like traders. This is about trading logic. Trading logic is different than coding or other logic, and this is a very logical zero risk step. And we're immediately improving the profit of the strategy from 200k to 223k and reducing drawdown from almost 40k to 30k and improving the average trades from 120 to 154. I mean, guys, this is huge. I don't know what you think about this, but it's one simple tweak, one simple formula. We can immediately see results without overfitting, without curve fitting. Very, very simple. Just using very simple trading logic. Now you can take more tips like this, and I'm delivering tips like this on this channel every week, and I delivered last week and I'm going to deliver more this week. So don't forget to subscribe if you want to know more, and then just stack them, and just by stacking them you can now completely transform any strategy you want. So that's another major improvement. As I said, there are plenty others in the BreakoutOS, in the Smashing False Breakouts Pro. So I'm going to talk more about these in upcoming videos. Now let me know, what do you think about this technique? Do you deploy this technique? What techniques do you deploy? And did you like this video? If you like this video, please definitely don't forget to give us like, so I know that this is the kind of content you want and I can produce more of it. So that's it. I'll be back with other technique very, very soon. So don't forget to subscribe, and I'm looking forward to see you in the next one. Meanwhile, happy trading.
All you need are breakouts. Let your spirit